Usually the bearer of bad news, Federal Reserve Chair Jerome Powell on Wednesday gave reason to be optimistic about the economy, acknowledging the Fed could cut interest rates as soon as their next meeting in September.
The broad sense of the committee is that the economy is moving closer to the point at which it will be appropriate to reduce our policy rate.
Fed officials are finally starting to see the signs they needed to know their restrictive rates are working. The latest came Wednesday in an ADP jobs report showing private payrolls in July grew at their slowest pace since January.
We just want to see more and gain confidence.
Lower interest rates would bring relief to prospective home buyers or anyone with a credit card. But federal budget hawks are also watching the Fed's next move very closely as the national debt just reached a dreaded milestone.
$35 trillion. We did it. Congratulations.
Arizona Congressman David Schweikert scolding his colleagues for not taking the debt seriously enough to do something about it while they still can. The Republican making this rare admission to prove his point.
The economy is good. The actual baseline data on GDP is good, and you're still burning almost $80,000 a second in borrowing.
The nonpartisan Congressional Budget Office projects a nearly $2 trillion budget deficit for 2024. CBO Director Philip Swagel says this about a future rate cut from the Fed.
The amount of debt has gone up by so much that even modestly lower interest rates won't change the fiscal trajectory.
He says the debt has not hit a crisis level yet, that it's still manageable. It's just a matter of whether policymakers are willing to act.
It's going to be a challenge for whoever is the next president to look out ahead and address the fiscal challenge.
How they tackle that challenge, whether it be higher taxes or cuts to social programs, can be tough to campaign on. In Washington, I'm Atrel Nishar reporting.